All right. Well, good evening, ladies and gentlemen. And we have begun the recording of this, so everything there should be working correctly. I just want to do one last audio test here, and I'm going to do something else. I'm going to do an audio test, so I need you to say, yep, audio, we can hear you. And the next thing I'm going to do is I'm going to toggle the slide forward just to make sure that the slides are moving. So if some of you would please just go into the question portal. Okay, Bill, thank you. And Bill, will you let me know, too, if you just saw my screen change? Did you see my screen change? Yes. Okay, good. All right, good. So we got audio, and the screen change is working. And, guys, I apologize. We've been having some technical challenges with the technology here today, but I do believe we've got it all fixed out. Bill, Mr. Bernard, if you would please, sir, if you would keep my cell phone handy through the presentation, and just text me if anything technically is not functioning correctly, and we'll get started. All right, well, good evening, ladies and gentlemen. My name is Lee Arnold. I am the CEO of PrivateMoneyBank.com, and I want to welcome you here tonight. I'm excited for you to be here. Tonight is all about education and training you on the process of private money lending. So this is for you guys. As I mentioned at the top, this is interactive. So I'm going to be covering a lot of information, and I'm going to be throwing numbers at you and probably even some words you may or may not know or haven't heard before. If at any time tonight something isn't making sense, go ahead and just type it into the question portal there, and time permitting, I will answer it. Now, if for whatever reason we don't get to the question, I'm going to give you my contact information and how you can get in touch with our office here at the end of tonight's training. Now, tonight should only take anywhere from 60 to 75 minutes, so I'm not going to occupy a lot of your time here this evening. But I do want everybody to leave here feeling like they've got a pretty good understanding of how private money works and why it is so incredibly powerful and profitable here in today's market. So without any further ado, let's get started. So who am I? Well, again, my name is Lee Arnold. I have borrowed and lent in the private money sector for the last 15 years. I've been involved in thousands of real estate transactions nationwide and personally been involved in more than $50 million collectively just from the people in our office. We've done over $800 million worth of loans, so this is just me personally. We've evaluated investment opportunities from both the borrower and the lender side. Now that's important because I'm not speaking to you tonight as a lender specifically. I am a real estate investor, real estate enthusiast first. I'm a lender second. We have bought and sold hundreds of properties all over the country. So we've been through the whole rehab, fix, and sell stage. Now, because of the nature of tonight's presentation and the way it was marketed, I'm under the impression that the majority of you are here because you have a desire to learn more about lending. So I'm not going to be talking a lot about fixing and flipping here tonight. That's another webinar for another time. Tonight it's strictly about lending. So why did we create Private Money Bank? Well, quite simply, we wanted to help investors build up strong and healthy portfolios, as well as to show people that investing in low-risk, high-yield investment opportunities that produce 8 to 12% returns on their investment not only is possible, but it's happening all day, every day. And if this is your first introduction to this type of thing, I don't want to trip you up with 8 to 12. You know, it's interesting as we go out and we talk to investors and people who are involved in this field or that field, it's always interesting to identify what people believe a good return on their investment to be. We were recently at a conference in Orange County working with some doctors there, and when talking with the doctors, the question was asked, so what would be a good rate of return for you? If you were making this, what would make you feel good? And the answer was 4 or 5, or some doctors even said, you know, we're getting 6, and we're pretty excited about that. And I'm only highlighting that because I don't want to scare anybody off with the 8 to 12%. If 8 to 12 scares you, the return on investment makes you feel like it's a higher risk than maybe you're willing or interested in taking, stick with me here. And I believe in the next 60 minutes I'm going to show you that it's really not high risk at all, but it is high yielding, okay? Also, we wanted to create a community of lenders and borrowers who can safely and efficiently benefit each other. It's kind of like a country club environment where if you are admitted access to it, then you have a pretty good understanding that everyone else in the room is kind of on the same playing field. Everyone's on par with one another, so you don't have to worry about, do they qualify, are they accredited, can we work with them, should we work with them. Know this, guys, if we are bringing you together as a company, as a lender and a borrower, if we are bringing you together to get involved in a transaction with each other, I can assure you that we have done our due diligence both on the lender side as well as on the borrower side. The other reason we created Private Money Bank is basically the challenge of the investment market today. The standard and Roth IRA and savings accounts, you're lucky if you're getting a 2% annual interest return. With the rate of inflation, many people are backpedaling, i.e. losing money when they invest in these types of retirement and savings accounts. Now, we know that oftentimes people are just parking money in there, but I got to tell you, if you will just take a little bit more active role or active approach to where your money is being placed and what it is you're investing your money into, you're going to see a much, much greater return on your investment. And the good news here, guys, I know that many of you here tonight who have money sitting in self-directed IRA accounts, I know that you're busy. I know that you have money in accounts because you are a professional and you work a long time, and that's why you've got the cash. So understand here, this is not going to require a large amount of your time. The average loan for a lender will take you less than 90 minutes to get into and out of, and I'm going to show you tonight how streamlined this process is so that you guys can better understand how it works. In 2008 alone, mutual funds, just mutual funds, lost nearly $600 billion, that's billion with a B, in value, and major stock market indexes such as the S&P 500 also experienced a 40% setback. And since 2008, many people who have yet to see their 401k fully recover, for many, the 40% setback was the difference between retiring and financial health and looking for a second career. And I can tell you that this really hit home for me because both of my parents are at retirement age, and 2009 was the year that they said, this is the year we're going to retire. But as many of you probably experienced, if you had money in the stock market or in some of these mutual funds that were being were earning interest based. All right, so let's get back into it here, guys. So anyway, where we left off, I was simply explaining to you that my parents were not able to retire because of some of today's investment challenges. But here's the solution, and I believe that private money lending for many, if not all of you, really can be the catalyst to get you from the returns that you're probably not real excited about and get you more. Why? Well, number one, it's a passive investment. You know, a lot of people, they hear the idea of private money lending and they think, oh, gee, I just don't have the time. But I'm going to show you that it's actually a pretty passive investment. And the way that we have created and structured this has simplified the process. And I'm going to ask, because I know that there are a lot of you here on tonight's call who have already lent through privatemoneybank.com as well as borrowed from privatemoneybank.com. While I'm just talking here, if you would do me a favor and just type in a quick testimonial statement about your experience in the borrowing as well as your experience in the lending, and I will just share those with others as we get into the Q&A portion here tonight. It does create an ongoing residual income over the life of the loan, and the great part is I'm not talking about 30-year loans here. I'm talking 6 to 12 months max. In some cases, we'll write the notes at 90 days to 120 days. So these can be very, very short-term loans, which is fantastic because it allows you to place your money into a high-yielding investment that will pay you back in a very short period of time. So if you're waiting for gold to come down before you go into it, or silver to come down before you get into it, or you're looking to just park some money there for a period of time and then have it come back to you, this is an amazing opportunity to make that happen. Furthermore, you're in a first trust deed position. And I'm going to explain this more in greater detail, but basically a first trust deed is a mortgage document against real property. So these are loans secured by real estate, where a borrower is interested in buying a property for investment. And let me just make this point of clarification at the top. We only lend to real estate investors, people buying property to fix it and fix it up, or to buy it, fix it up, and resell it. That's who we lend to. We do not lend to people who want to own or occupy the property. Why? Because that's the whole licensing nightmare that we don't even want to deal with, and we don't want you to have to deal with it either. So we do what's called a commercial loan, meaning that they're not going to live there. Now, that doesn't mean we just lend on commercial. We also lend on single-family homes. But this is really the investment product for the weekend warrior investor who wants to go out and buy a house, clean it up, fix it up, and resell it. But it's also for the professional investor who's doing 10, 20, 30 properties a year, a month, or a week. We just had lunch today with a gentleman who's buying $10 million worth of small residential homes a month. I mean, they are doing some real volume, some real capacity, and they were coming to us saying, can you help us? And we said, absolutely, and we would love the opportunity to engage and help you whenever and however we can. Now, the other reason these are incredibly safe is we are only lending 65% of the acquisition price, which means if an investor comes to Private Money Bank and says, hey, I'd really like to borrow $100,000, we say, well, what are you buying the property for? And they say, well, I'm buying it for $100, but fixed up and cleaned up, it's got to be worth $200. Well, we don't take into consideration the after repaired value from the lending standpoint. Our job here at PrivateMoneyBank.com is to protect you, the lender, to make sure that your money is going into the safest types of investment vehicles to ensure that you get your money back at the end of the term. Okay? So we want to make these incredibly safe. So this lender or this borrower comes to us and says, hey, I need $100,000. We very quickly say, great, we can lend you $65,000. You will need to come up with $35,000 either in cash or out of a self-directed 401k of your own, or what we call cross-collateralization. Now, cross-collateralization means they could put up another piece of property that they have free and clear that they've owned for longer than 12 months, and we can use the value of that property, and now we can use the one they're buying and the one they own. We can do what's called a blanket mortgage and secure the first trustee with your money against both properties. So it's incredibly, incredibly secure. Now, for those of you here who are more interested in being the borrower, and you're going, well, Lee, if this requires 35% down every time, I don't have any cash, so clearly I'm out of the running. No, 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 no. Please understand that if we are not facilitating borrowers getting funds and lenders placing their money in these very low risk investment opportunities, then none of us are making any money. So because I personally have been investing in real estate for over 15 years, there are a lot of creative strategies that we can employ to both give the lender a sense of comfort about the transaction as well as get you, the borrower, the funds that you need. Now, here's something else that's unique about what we're doing. Many of you who have invested funds in other investment opportunities have probably been presented with, you know, look, I'm buying this large hotel, and we're going to raise $100,000 from 20 people, which will give us $2 million, and we're going to go in and we're going to do this syndication type deal. That is not what we do, all right? What we do with you as a lender is what we call a one-off relationship, meaning if you came to us and said, hey, you know, I don't have much, but I do have $40,000 in a self-directed IRA. Can you place my funds in one of these loans? And the answer is possibly. And what we're going to do is we're going to look at the various investments or the requests for funds that come to us and through us, and anything that is $40,000 or less, we will send you an email. And we'll say, hey, here's a potential deal that matches the amount of money that you're looking to place. Let us know if you are interested in funding it. You see, what's great about our model is we never touch anybody's money. Your money is wired to the title company or the escrow company or the accountant office or the title company that this loan is closing in. So Private Money Bank will never ask you to wire money to us. We will never ask you to commingle your money with other people. We simply provide you with an opportunity. I'm going to show you some samples tonight of deals that have been funded just last week, where an email went out. You as a potential lender with us would look at it. If you want more information, there's a process for that as well. But you ultimately decide. You as the lender are in the driver's seat, and it is as simple as opening your email and looking at the opportunity each day. And we typically do 1 to 2 emails every day of available funding opportunities. And I'm going to give everybody an opportunity to get access to those emails just here when we wrap up. Okay? Finally, I touched on this. You require 35% in the game from the borrower, and it comes in the form of cash, partner collateral, and or equity. So let me give you a real simple rudimentary example of kind of how this works. Let's say that we have an investor named Steve. He's buying a house to fix up and to resell it for a profit. And because of the nature of the deal, Steve cannot get money from conventional banking institutions. And that's one of the reasons that private money is so incredibly powerful in today's market. Banks just are not lending to this demographic, to this investment group. If you've walked into a bank anytime recently and requested a loan against an investment piece of property that was in disrepair and needed rehab, there's very little chance that you actually got funding for that deal. So private money has really become a valuable tool in today's current economy. Also, it's important to know this, and I want you all to write this number down. Right now in today's marketplace, in the period coming out of the Great Recession, as they're calling it, there currently sits over $16 trillion in retirement accounts, mutual fund accounts, savings accounts, checking accounts, IRAs, 401ks of Americans in this country. 16 trillion with a T as in Tom right now sitting in bank accounts. If that money were to be put into the marketplace in these types of loans, it would literally change the housing market. Why? Because now people would have access to the cash that they need to go in and get involved in these types of opportunities. So what can Steve do? Well, Steve can go out and get private money. So Steve says that he's paying $100,000 for a house that he can resell for $200,000. Now, Steve has $35,000 in cash and needs to borrow the rest. So don't think that these are just investors that are down on their luck. They got nothing. They don't have two nickels to rub together. That's typically not the type of clientele that are coming to private money bank. These are usually people of some affluence, some means. They've got some money in the bank, but they don't have all of it. They need that extra bridge loan for that 6 or 9 month period of time to allow them the money to acquire it, fix it, and then resell it. Okay? So Steve's got the $35,000 to put down, so he contacts Linda and offers to pay her a premium price to borrow $65,000 for a short period of time. Now, Linda, knowing that she'll be in first trustee position against Steve's property, is happy to provide the funds that he needs. Linda will also earn a relatively high return on her investment. So here's kind of how the numbers break down. The after repaired value, you'll notice that Steve said it was $200. Well, when private money looked at it, we determined that it was really only worth $175. So we're going to run all of our numbers based on what we have determined comps in that market to be. Now, how do we determine comps? Through independent parties. We do not allow the borrower or the lender to have any say whatsoever in our determination of the value. And as a lender, we will provide to you in paper form, electronic form, all of the due diligence items that we have discovered against the property so that you can review it. So you can look at photos of the property, the exterior, the interior, you can look at the numbers, you can look at the surrounding comparables, the sales, the amount of inventory that's on the market, the absorption rate of the surrounding sales. Every piece of data that you need to know whether you feel comfortable with this deal will be provided to you by a private money bank before you ever decide, do I want to lend on this deal, yes or no? Okay? So Steve's needs $100,000. He puts up $35,000. Linda puts up $65,000. Let's push her at a 65% loan to purchase, not loan to value. It's loan to purchase. However, if you look at the after repaired value of $175,000, we're at a 37% threshold here. So it's a very, very low risk deal. Now, let's say that Linda's going to charge Steve 9%. For the $65,000 at 9%, Steve will make payments to Linda each and every month, $487 on a 12-month term. So Linda's going to get a check for the next 12 months, $487 each and every month, which means over the course of the next 12 months or 1 year, Linda will generate $5,850 on her $65,000 loan. Okay? Now, let's fast forward to 12 months. Steve goes in, he fixes up the house, and he sells it for $175. Deduct the total closing costs and fees. 10% of the sales price is what we spent it at after excise tax and all of the other things that the various states charge. We're going to deduct $17,500 in fees. He invested $15,000 in the fix-up and the repair. Then we better reduce the debt service. Okay, so 5 months at $845, that takes off $422.2. Payoff of the loan from Linda at $67.6, and the reimbursement for the down payment. So when everything settles out, the total profit to Steve is $35,675. The total profit to Linda is $6,825. Now you're looking at this going, well, good grief, it looks like Steve is the one who really made out like a bandit on this deal. Well, also keep in mind that Steve's the one that did all the work. Steve went out and he found the deal, and he put in the blood, sweat, and the tears. He took on the risk of this loan because Steve ultimately was on the hook to fix it up, clean it up, and get it sold so that he could get Linda her money back. Because here's the great part about first trust deed investing, and here's why it's so incredibly safe. If, for whatever reason, Steve opted to not pay Linda back, Linda can foreclose on the property and take over ownership of it. Now, I can tell you that PrivateMoneyBank.com, as a company, we have less than a 1% foreclosure rate on our entire portfolio. Less than 1%, which means you do 100 investments, you do 100 loans with PrivateMoneyBank.com, there's a 1% chance, based on our due diligence, that you might have to take a property back in foreclosure. So it's a very, very low risk. And it's much lower than most other first trust deed lending companies because our due diligence and our numbers are pretty stringent. We don't want to just lend money to lend money. We want to lend money to competent operators who can get in, get out, and go do it again. That's what we're looking for, and that's what we're going to provide to you as a lender to know that this is a good, sound investment for you, which creates a win-win for everyone. Our philosophy here is if anyone loses on a deal, we're not interested. All parties must win. Now, some of you are probably thinking, well, gee, Lee, 9%, certainly that's better than the 4% I've been earning in my retirement account or in my mutual fund, but, you were talking about 8 or 12. You're showing me 9. I want 12. Well, let me show you how you can achieve 15, all right? Let's take this deal. Let's take Steve now. Steve's in and out of that deal, and now he wants to go and he wants to buy a fourplex. And we can accommodate Steve in buying a fourplex. The same numbers apply. And we take a purchase price of a fourplex of $250. So if Steve's paying $250 for this fourplex, we can lend 65% on it because the fourplex is still considered residential property. Anything over 4 units, 5 or more, would be considered commercial. Now, we do commercial loans. We lend on commercial structures as well. However, we will only lend 55% of the acquisition value because commercial properties move a little bit more slowly. So we want to reduce the level of the loan just to decrease any risk that would be absorbed by the potential lender, okay? But this is residential. So if you want to make more money on your investment, here's how you do it. In the private money world, also referred to in some circles as the hard money world, there's something called loan origination that is charged. I want you to write that number down, loan origination. And it's quoted in what we call points, all right? So if somebody came to me and said, Lee, I need to borrow $100,000, what are your terms? I would say, well, it's 4 and 14. And what I'm saying is it's 4 points loan origination, and it's 14% interest. So anytime you hear that, it's 4 and 14, or it's 3 and 12, or it's 5 and 15, what they're quoting to you is the loan origination fees as well as the annualized interest of that loan. Now, 4 points is essentially 4%. So for Steve to borrow this $100,000, if we charged 4 points, that would be $4,000. Now, the great thing about points is points are what we call front-end loaded. Points are the income that you earn today for the work that you do today. Because lenders, you have to take some time to open up your emails, to look at the prospective offering, to review the due diligence, determine if it is indeed something that you want to pursue or look at, and then go through the process of wiring the funds and setting up the third-party collection of the monthly payment. I'm going to show you that all of that is done for you, and it's an incredibly streamlined process, but I'll get to that. Okay? So the way that you earn a greater return on your invested dollar is on the front end by charging some loan origination points. Now, I can tell you that privatemoneybank.com offers points to its lenders based on the type of loan that it is. And if you as a lender feel like, you know, Lee, man, this is a little more risk than really I'm willing to look at. So tell you what, if instead of giving me a half point on the origination, if you'll give me 2, I'll do it. So points are also there to absorb that risk if, for whatever reason, the loan makes you uncomfortable. Now, if the loan makes you uncomfortable, let me encourage you to not do it. Don't do it. I don't want you getting yourself into a loan that you are not 100% comfortable with and competent about. Now, because we do lend all over the country, there are opportunities for you to lend in your own backyard, 1 state over, 2 states over, or 10 states over. Doesn't matter. But you will receive these emails. If you opt in and say, yeah, I'm kind of interested in being a lender here tonight, if you fill out our simple little form here tonight at the end and you say, yeah, I'd like to look at some of these files, then we will put you on our email distribution list. We'll forward these investment opportunities to you, and you can look at them. And if you're interested, call our office, let us know, and we'll send you the due diligence package. And if you're not, just delete the email. No big deal, okay? So on this particular loan, here's what we've got. We've got an annual interest rate with Steve on this deal at 15%, and it's a 6-month loan, all right? Now, what's interesting here is that if you take the 15%, that's annualized, but you'll notice that this is only a 6-month loan. Well, if you can lend $162,500 for 6 months and make 2 points and get paid back, then the assumption has to be made that you can take the same $162,500 in the second half of the year and earn another 2 points. So even though you're earning 15% on your money or interest for the loan, you'd also be earning an additional 4 points. So add the 4 to the 15, and you're earning a 19% return on your investment here, which is, as you know, a pretty good return. Now, some sources of funds. Home equity. You know, it's interesting because I told you that my parents want to retire. And it's fascinating to me because they actually don't owe anything on their house. They bought it 35 years ago. They made payments on it. They own it. But now they've got $400,000 worth of equity in this property that they could very easily leverage. They could get an equity line of credit against it, and then they could use the bank's money that they're borrowing at 4% interest on their personal residence, and they could put it into first trust deed loans and earn 8%, 9%, 10%. They very easily could recover their employment income simply by lending their home equity. But again, this is about getting comfortable with the threshold. So please understand that it's not my intention here tonight to sell anybody on becoming a first trust deed lender. My purpose here tonight is just to help you better understand the process of it, and if you are interested in learning more, giving you and providing you with that opportunity. But please know, tonight you don't need to make a decision. You just need to decide, is this something I want to explore further? Okay? Also, self-directed IRAs. We do a lot of lending with investors who have money parked in a self-directed IRA, and to me, that's the smartest thing you can do because it's parked in your self-directed. You can lend it out. All of the monthly payments go back into the self-directed, and it's tax-free. So guys, I'm talking 9, 10, 11% returns here, but what if you could also eliminate 30% of the earned income tax? Well, you can do that through your self-directed IRA. So we have a lot of clients and customers that call us on a regular basis saying, hey, I've got my money in this Roth IRA. Can I do a rollover into a self-directed? And the answer is absolutely, but we do a lot of work with Equity Trust. Equity Trust is a great company. We don't get paid anything by referring them. I don't get paid anything by saying their name. But what I can tell you is when we work with investors who have funds in an Equity Trust self-directed IRA, the process is just so simple and it's so smooth that we really enjoy working with them. So if you've got money in the self-directed IRA, we work with other custodians. Okay, so you don't have to have your money in Equity Trust to work with us. I'm just telling you that they do a great job, and it's very easy to do business with them. Cashing out of stocks, if you've got money in commodities, precious metals, if you've got it in gold and silver that you bought even 6 months ago, I'd probably encourage you to keep it there. But hedge fund money, foreign exchange currency, or you could borrow against a real estate portfolio. Now, something that's interesting that we have not seen in the last 15 years of lending, this is really the first time I'm seeing this, investors who have property that is free and clear are actually coming to private money banks to get private money against their real estate portfolio because banks won't lend to them. And they're excellent operators. They understand the process and the program very well. They just need more access to capital so that they can buy more deals. So they bring to us their free and clear properties. We match their free and clear properties with investors that have cash that want to earn a greater return. It's a great relationship. Everyone wins. Okay? So the private money bank borrower process. Okay? I'm going to walk you through kind of the due diligence that we do to ensure that you're safe. We painstakingly ensure that your money is placed safely in loans that will produce the highest revenue in the quickest manner. Again, we want your money protected. So we are going to review the property's type, where is it, what is it, the condition, the location, the proximity to the investor. We are not really fond of doing loans to investors that are buying properties in the states that they do not dwell in. I don't know about you, but I have made the unfortunate mistake of buying too many properties in an area that was a long distance from my home base, and boy, the fix-up costs were triple what it would have costed me if it was in my own backyard. So we really prefer lending to practitioners of investments that are within 25-mile radius of their home. That's really what we're interested in. We're going to look at the surrounding properties. Is it the most beautiful, largest house on the smallest street, or is it the smallest house on the most beautiful, largest street? And because we have been investing for so long, we know what we would buy. And our rule here at privatemoneybank.com is if we wouldn't write the check out of our own account to fund that deal, we will not even present it to you as a lender. So know this, when you get an email from us, that is a loan that we would fund with our own money. Now, some of you are probably thinking, well, Lee, if you would fund it with your own money, then why don't you? Well, here's the issue, guys. We would run out of money. We are getting anywhere from 10 to 20 loan applications a day from people that are submitting fantastic loan opportunities. They got great deals. And the problem you have with a lot of other private money firms out there is they've gone out and they've raised $5 million or $10 million. And once they run out of that $5 or $10 million, they're out of business. You see, what's great about our model, by bringing in lenders the way that we are and paying out 50% of our profits to our lenders, the reason for doing that is we can never run out of money. Because you see, we are constantly, daily, having new people coming to us saying, hey, I've got $100,000 in the self-directed. I'd like to get it in one of these 6-month loans. Can you help me place it? And we say, certainly, we'll put you on our email distribution list, and when you see a loan you like, just give us a call, and we'll help you to facilitate that. Or we'll have somebody call up and say, hey, I've got $1 million I'd like to get placed. Can you help me? And we would say, certainly, but we would not encourage that you put all of your $1 million into one loan. We would actually encourage you to take your $1 million and chunk it up. Put 150 here, put 50 here, put 75 in this one, put 125 in that one, and break it up so that you don't have all of your eggs in one basket. And I'm going to show you here an example of what a healthy portfolio looks like from one of the lenders that we currently have. And you can see that all of the areas that they're lending in, they've got a nice blended portfolio. They're lending at various price points, and they're really running their business effectively, and they're running it safely. And we will teach you and show you how to do that. Okay? So, private money bank borrower process. Now, we also review information about the borrower themselves. Now, even though we are an asset-based lender, which means 90% of our consideration as to whether or not we are going to fund this deal is based on the property itself and the condition, we also want to know about the background of the borrower. We want to know, what have you been doing? Do you have the experience that you've done this in the past and that you've succeeded at it? Do you have the motivation? Now, speaking to motivation, when we get on the phone to take their loan application and my loan officers fall asleep on the phone because this person speaks so slowly that it's difficult to follow, I'm not saying you've got to talk 1,000,000 miles a minute to be motivated, but guys, know this. When people are motivated and they're busy, they need to get words out so that they can move on to the next thing. So that is something we really look at. Previous volume, how many deals have they done in the past, as well as willingness to abide by private money bank's terms and conditions. So when we send over to them the 4-page borrower agreement and they balk at it and they say, yeah, I'm not signing that, we say, that's fine. You don't need to borrow money through us. You can go get it from somebody else. And here's something that's fascinating. We have had person after person after person come to us, get our quote sheet, tell them, yes, we can fund it, here's what we're going to charge, and they say, that's too expensive, I can get it cheaper somewhere else. I'm happy to report 100%. This means everybody who has balked at our pricing said they could get it cheaper somewhere else and left to go find it within 4 to 5 weeks, came back to us because we were the only place that had the liquidity to fund. Why do we have liquidity when everybody else doesn't? Because our liquidity is with you guys. Our liquidity lies in the relationships that we develop with people like yourselves who are looking to do more with your retirement money. And that's why it works. It's a win-win. It's what we believe in. So the borrower packet, here's what we do to create this. It is our goal to ensure that your monthly interest payments will be received on time, every time, and that your investment funds be returned at the end of the loan term. So not only are we going to determine that it's in a great area and that properties there are selling if their exit strategy is to fix up and resell, but we also want to make sure that the borrower has sufficient income or at least cash in the bank that they can service the loan for the 6-month period of time or the 12-month period of time that they have made representations that they will be borrowing the funds. So here's how it begins. Somebody comes to one of our affiliate landing pages, either through a Craigslist ad or something that's online, or one of our affiliates goes out and passes out a business card. Now, right now, we have over 800 affiliates spread out all over the country who are privatemoneybank.com affiliates. They've got business cards. They've got landing pages. And when somebody comes to us through their page, they opt in, meaning they put in their name, their phone number, and their email address. And then they're given the opportunity to fill out this borrower application. Now, they can fill it out online, or they can print it out, fill it out by hand, and fax it in. So they'll go through and fill out the 3-page application. Okay? From this application, we then will do some initial preliminary due diligence, and we will provide them with a pre-approval letter. Now, I apologize that it's so small, but I'll just quickly read through it. Okay? This letter will confirm Private Money Bank LLC's pre-approved from its affiliate lender to facilitate a new deed of trust in first lien position on the above captioned property. PrivateMoneyBank.com LLC is representing your loan package subject to the following terms and conditions. Now, we've taken out the borrower's information to protect their identity. The term on this loan is 180 days or 6 months with 2 30-day extensions available. 30-day extensions add 1 point to the loan amount, and interest increases to 25% if they go beyond the extension. Monthly payment will be $16.25 based on a 13% interest rate with 4 points for origination. So the fees would break down to that amount. And then you can see here that the loan conditions are these. Loan conditions are these. Contact information for escrow closing officer. Loan is subject to final lender approval. Now, final lender approval, guys, is not Private Money Bank. Final lender approver is you. So we do not close this loan until you give us permission to close this loan. And that's what I love about our model. You as the lender are 100% in the driver's seat, and deals are only funded when you give final approval. Okay? Loan must be for business purpose with borrower signed letter stating agreed purpose. We have the borrower sign an affidavit that they are not going to live there, that this is indeed a non-owner occupied property to protect them. And finally, 4 additional conditions may be requested before investor review. Upon satisfaction of the loan conditions listed above, this letter confirms your intent to secure funding with the lender on the property address. Please sign below to acknowledge the agreement of the above terms. Return via scan/email to CB. Here's the fax number, and please do not hesitate to call. We look forward to working with you. Now, the next step in the process is for the borrower to agree to the terms. Because if they're not going to agree to the terms and the pricing as we are quoting it to them, and they're going to go shop us, we don't want to put this in front of our lenders just to have the borrower walk. So we are very sensitive to our lenders' time because we know you guys are busy. We know that you're professionals, you're doctors, you're business owners, you're entrepreneurs, you have money. So we only want to present you with deals that have the greatest chance for funding. So we require that this pre-approval be signed by the borrower so that we can know that they are serious and are going to move forward. After they have signed the commitment, we then send to them our borrower agreement. Now, the borrower agreement is a 4-page document that has to be signed by the borrower that basically says, and if you've ever borrowed from us, you've seen this. Also, you can find this on our website after you've come through as a borrower. But it basically says, borrower beware. It says you are an adult. You have the competency to know what is or what is not a good investment. No representations by private money bank have been made as to whether this is a good deal or a bad deal. And you could lose everything as a result of borrowing this money. So our attorneys did a very good job in drafting an agreement that protects not only privatemoneybank.com, but also protects you as the lender. See, there's no recourse against you as the lender because they signed this borrower agreement. So the borrower agreement is now signed. We have them sign this property affidavit that says they won't dwell there. It will not be owner-occupied. And then we also have them provide proof of insurance. Now, here's the great thing about being a lender. You see, you're not lending money to private money bank who's then lending it to the individual. You are actually lending the money directly to the individual, which is why we encourage you lend through a self-directed IRA or through an LLC or some other entity, so it's not you personally, but the funds are led directly to them through you. We facilitate the process, but here's what's great. Before you wire funds, they have to provide proof of insurance showing you as the lender as the lost payee, which means if the property is destroyed by fire or rain or acts of God, the insurance company will pay you back for the amount of the money that you lent, which means your investment here cannot just poof and disappear. And if it does poof and disappear because of a tornado or a hurricane or a tsunami or a fire, the insurance company covers your investment. Now, can you tell me any stock that you can buy in the market where the person that is borrowing your money, the company that's borrowing your money, will give you an insurance policy to say that if you lose money, this company will pay you all your cash back? So this is one of the things that makes it very, very secure. So the borrower pays for the policy. You as the lender do not pay for that. Okay? We also will provide you property comparables as well as CMAs telling you about the surrounding properties, properties that have sold, properties that are out there, and we will also have the borrower pay for and provide to you, the lender, a commitment of title insurance, which guarantees that you are in first trustee position against that particular property. And in the event that there was any fraud or anything went wrong, it's not you on the hook, it's not the borrower on the hook, it's the title company on the hook. So you have insurance guaranteeing that if the property is destroyed by fire, you get your money back. You have a policy of insurance, again paid for by the borrower, that says if you're not in first trustee position, the title company will give you all of your money back. So again, when you consider that we are at 65% of acquisition, and that the borrower is putting down their own money to get into this deal, and that we are determining that they have the financial wherewithal to cover the monthly payments, and then they're paying for and providing not only a lost payee policy, but they're also providing a title insurance policy, your money is incredibly, incredibly safe in these types of deals. Now, knowing this, why wouldn't you just go out and do this yourself? I mean, seriously, I'm not doing anything that nobody else can do. I mean, certainly we've created a nice formula and we have a nice system, but the reality is here, guys, anybody can go out and do this. You don't need me and you don't need private money bank. But I will tell you this, it's incredibly challenging when you're a professional working a full-time job, running an office, running a practice, to go out and do this yourself. And if all you have to do is look at an email once or twice a day and look at the already provided information and make a decision at that point, like I said, it's less than 60 minutes of your time start to finish, because all of these documents, all of these items will be babysat and provided to you by us for you. Again, the borrower checkup. In addition to everything we want to know about the property, we also want to know about the borrower. How much money do they have in the bank? So we're going to ask for a personal financial statement as well as bank statements. We want to see that they have the financial wherewithal to cover the monthly debt service on the loan. So we know going in that they've got enough money in the bank to cover your monthly debt obligation each and every month out of their savings account. So the money to pay you the monthly fee on your loan, it's in their bank account. Not too shabby, huh? So the borrower checkup, personal profile, and we also do what's called a soft full credit report. We do not do a hard full credit report, which gives us their FICO scores and all of those things. And the reason that we don't is we don't want to be liable for the credit score on file, for one. For two, we don't need it. Okay, I don't need a score. I can look at somebody's credit report, and if I see collection charges and I see bankruptcy and I see foreclosure on it, I know that their credit score is pretty hammered anyway. But I will tell you this, I'm not so much concerned with their credit report. If the property makes sense and the loan is safe and they have the financial wherewithal to make monthly payments and we feel that the value is there, we're probably going to fund the loan. Now, again, that's up to you, but we will talk through that with you. Okay? So the lending packet. Now, this is for all of you who are interested in lending. What can you anticipate receiving from us to know if and when you should move forward? Well, let me show it to you. Okay? First of all, you're going to fill out the lender application to tell us the types of properties that you are interested in. Okay? It looks like this. Now, I will give you the URL that you go to fill this out. If you go to privatemoneybank.com, it's not there. This URL was created specifically for tonight's presentation. And all we need from you is this: first name, last name, email, phone. Have you ever lended on property before, yes or no? How much can you lend? What geographical area are you looking to lend in? And how fast can you liquidate the funds you want to lend? Meaning, do we need to assist you in a Roth IRA rollover? Or maybe you're with another custodian and you want to put your money with equity trust just to kind of simplify or streamline the process. Or maybe you're like some of our other clients who have they've worked at several different jobs. So they've got, you know, $5,000 in this account, they've got $10,000 in this account, they've got $15,000 in this retirement or 401k account, and they want to consolidate them all into one IRA. We will help you facilitate that. Okay. So when you fill out this form, a member of my staff will call you. We will set up a time. All we need is about a 15-minute consultation. Find out what you want, where you want, and then begin facilitating the process of consolidating the monies that are going to be used to lend into a place that we can get access to them quickly when we find a deal that you like. Okay? So you fill that out. You'll talk to an expert lending specialist about your personal lending preferences. So you call and talk to one of our people. You'll review loan summaries, and you'll pick the one you're most comfortable with. We send you emails. Now, this is what a loan summary would look like. Okay, so you will get an email. The subject line will say, another great lending opportunity is here. You click on it, you open it up, and it says, hey, affiliates, here's your opportunity to get paid. This is the deal that is ready to fund right now. The requested loan amount is $150,000. The current market value as is $319,000. There's a cross-collateralization mixed-use residential with commercial units included. We are at a 47% now. Located in St. Louis, Missouri, and the loan pays 14% on a 9-month term. If you have an interested lender or you're personally interested in this funding opportunity, please contact CB at pridemoneybank.com or call the office to receive the complete package. Now, when you as a lender call the office to receive the complete package, we will send you a non-circumvent agreement, which basically says you're not going to go around us. Okay, we're going to provide you with the information that you need. And you're not going to go around us. If you do fund it, you'll fund it with us, through us. Okay? The next thing that you will do is sign a lender agreement, which will allow you to get copies of the closing documents and approve the closing documents and get wiring information. Now, again, we use an independent third party. You will never wire funds to privatemoneybank.com. You will only ever wire funds to a trust account that is managed by the state. The state oversees this trust account through either the attorney that has it, or the title company that has it, or the real estate brokerage that has it. And as you know, trust accounts are very well secured, and that's where we want your money to go. So you get all of this information from us, and you have however much time you need to look over it. Okay? If you say, hey, you know what, I'm interested, send me the lender packet, send me all of the information about property, send me the HUD, send me the contracts, the closing documents. I want to look at everything. If you're like me, you're somebody that likes to touch and feel the paper. And we have some lenders who don't like getting the information digitally. And I will tell you guys, if you're like me and you like to touch it and feel it and have it in your hand, we will actually print out the due diligence packet and overnight it to you via FedEx. We'll put it in a nice spiral-bound folder. We'll put a color photo on there. We'll put it in a nice presentation packet. If you aren't personally interested in lending, but you know somebody who might be, we can forward to you or overnight to you the lender packet. You can look at it if you're the interested funder, or you can pass it off to friend or family or partner. Okay? So it's very clean, very simple. So Private Money Bank will set up the closing. We will facilitate the signing and the funding of the deal. We will post the closing documents, and we will set up the third-party escrow provider to collect the monthly payments. Now, we use one of the largest and longest-running and most secure third-party collection agencies that we have found, and it's a company called FCI. Okay? Now, FCI is a group out of Orange County. We've been working with them for quite some time. We love them. Our clients love them, and here's why. You don't have to worry about sending a billing reminder to your borrower each and every month. Okay? We set it up through FCI. It's $17 a month. That $17 is paid for by the borrower. FCI will send them a billing statement on the first of every month when their payment is due. That borrower will send their check to FCI. FCI will cash the check and then wire funds directly to your bank account. Now, you can get a hard check if you would prefer, but guys, if you are traveling and you're busy and you don't have time to be running to the bank or anything else, FCI will communicate with the borrower, collect the payment, deposit the payment, and wire it directly into your account, which means it's incredibly hands-off for you. Now, FCI collects and sends you ongoing monthly payments, sign the payoff and the reconveyance, and sit back and earn 8 to 12%, and you can do it over and over and over again. Now, I would encourage this. I'm sure that there are some here tonight who have several $1 million sitting in idle retirement accounts that's not doing anything. Now, as much as this looks good, you're thinking, oh man, I could take money from here and I could take money from here, and I could probably put $3 million into this thing. Let me encourage you to do one deal. Do one deal, and I would prefer that you do a deal that's under 50 grand, okay? Just get comfortable, get familiar with the process. And if you like it, do another one. And if you like that one, do another one. I want you to ease your way into this until you have a level of comfort. And if 50 grand is too high for you, that makes you uncomfortable, hey, you know what? We had a request for $13,000 on the deal today. So we do get requests for small sums of money. So it doesn't matter if you've got $50 million in the bank or 50 grand in the bank or 5 grand in the bank. Because of the nature of our platform, we get requests for all kinds of different denominations on all kinds of different properties. And what's great about being a proposed or identified potential funding source with Private Money Bank, you have the opportunity to see these funding requests and decide, is that something I'm interested in doing, yes or no? Now, here's some income from people that have already done. Now, this is point revenue. Now, what I mean by point revenue is, as a lender, we pay you loan origination points just for doing the deal. So here's a small deal that was funded. We paid them 1 point. You can see it at the bottom, $1,150. That's the first check they got. Here's a lender that got 2 points, $858. This lender was paid 2 points at closing, $1,500. This lender received 1 point, or $422.50. This lender received 2 points, or $884. This lender received 2 points at closing, $663. This lender received 3 points at closing. Now look at this deal, guys. 3 points on this deal was $30,750. Now, as you know, 3 points on 30 grand, that was $1 million loan. Yeah, we had one investor that funded a nice package that we found for him as $1 million plus deal, and we paid 3 points on it. So not only did we identify it, we did all the due diligence, and I actually flew staff down to Alabama to walk through each and every one of these 38 properties to make sure that this investor was protected, because that's another rule we have here at privatemoneybank.com. If you are funding a deal that is greater than $1 million, I will send staff internally to go down and look at that property. And if you want to go and meet our staff on the field and walk through the properties yourself, we would love to have you do that. Several months ago, we had what looked to be a very safe, very good investment on a golf course down in Orlando. So I called some lenders who were interested in lending at the $1 million plus mark, and I said, hey, we have here what I believe to be a good package, but before you guys fund, I'm going to go down and walk every one of these holes on this golf course. And they said, well, Lee, we'd like to go with you. I said, great, well, meet me down there. So the next day, we all got on a plane. They were from a different part of the country than I was, so we all met in Orlando. And we spent about 5 hours driving around on golf carts, and we went all through that golf course. And when we got done with it, we went to the pro shop. We met with the staff. It became very clear very quickly that the golf course was mismanaged. And we didn't want to get into a situation where we were going to have to come in and run a golf course. We are looking for passive investment opportunities where the operators are competent and they can do it. So we opted not to fund that deal, even though it looked great on paper. When we physically walked it, we didn't like it. And that's the safety and the security that you have dealing with us. Again, if we wouldn't write the check out of our own account, we're not going to ask you to write the check out of your account. But this is the kind of funds, this is the kind of revenue that you can anticipate as a lender. Now, I was talking about the FCI dashboard. I love this tool. This is one of our investors right now. They've got about 38 loans that they've placed through us with us. And you can see here, okay, look at the mix here. These are all loans, active loans. Then you can kind of see here 68,000, 156,000, 35,000, 67,000. And you can see that they're doing all kinds of different denominations here. But here's my favorite part. You see this little map thingy over here where it says loans by state? What you don't want to do is be heavily invested in one area or another. You want to have a nice blended portfolio. Now, this lender has the comfort being in multiple markets. If you're not comfortable being in multiple markets, when you fill out the lender profile, just tell us, I'm only interested in the West Coast, I'm only interested in the East Coast, Southwest, Northeast. You tell us where you want to be, and we will make sure that you only get loan submissions in those areas so that you're not getting bombarded with all of these opportunities. But if you're like this investor who is interested in multiple opportunities, then we will provide them all to you. Now, this lender was looking to get $3 million out through us, and they were successful in doing that. And they have more to lend. Here's the other great part, guys. You put $3 million through us or $10 million through us or whatever else. You're going to have a nice blended portfolio. You're going to have properties in various markets. You're going to have different operators sending you monthly payments each and every month. And every 6 months, one house will pay off. So again, you're not looking for $3 million to be paid off in 6 months or 10 months or 12 months. You're actually separating it. I want you to have a nice blended portfolio. And if you're looking to put out $300,000, $400,000, $500,000, I would encourage, again, do $50,000 this month. And next month, do $75,000. And the month after that, do $150,000. And blend your portfolio so that at any given time, you're expecting monies to come in. We then will work with you. If we know that you've got 75 grand that's paying off next week or the week after, we will work with you to make sure we get your funds back into work or back into the next deal if you're ready to turn it again. But the great thing is this. When a deal pays off, the monies go back to you. They don't come to us. They come to you. The borrower will pay FCI. FCI will wire your funds to you. So this is an example of a nice blended portfolio. And for those of you that are lending, when we set you up with an account over at FCI, this is what your dashboard will look like. And here's the great thing, too. You don't have to wonder when your money is coming in. You can just look over here and know exactly what to expect. In trust, we've got a payment coming in on May 12th, May 13th, May 13th. Okay, so on May 12th, this investor is going to get $207.96. On May 13th, they're going to get 543.33. On May 13th, they're going to get 526.67. On May 2nd, they're going to get 390.17. And you can go through here and know at every given point when those funds are supposed to hit. So you now can adjust accordingly and really manage what you're doing. So it's a great, great tool. We love what FCI provides for us. They're just a great company. They've been a great partner for us, and we really enjoy using them, and we're going to continue to do so. So with PrivateMoneyBank.com, confidently become the lender. Now, I'm going to say it a different way. Confidently become a lender and slowly become a lender. Guys, I'm just encouraging you that you go to PrivateMoneyBank.com/lender survey. It's only got the 5 questions that I talked about there, and all you're saying is, hey, I'd like some additional information. We're not going to call and hard sell you. We want a long-term relationship with you. If you're looking to place your money into higher yielding, safe investments, go to PrivateMoneyBank.com/lender survey, fill out the form, and a member of my team will give you a call and just talk through what are your goals, what is it you want to accomplish, what areas of the country are you interested in lending, what amount of money gives you a comfort level to move forward initially, okay? Great, you've got $500,000 in the bank, that's fine. Let's talk about $50,000. Let's do one loan. Let's get you familiar with the process. Let's get you set up with FCI. Let's show you how to use the dashboard. Let's roll your money from a Roth IRA to a self-directed. Let's bring all of your various retirement accounts into one place so that they can be used more effectively. Those are the types of things that we're going to work with you on. Those are the types of things that we're going to help you with. Just go to PrivateMoneyBank.com/lender survey. Okay? Now, what you'll find there again is this. Also, guys, for those of you that go to PrivateMoneyBank.com/lender survey, twice a year, I teach a 4-day, what I call a funding tour. Okay? Now, the way a funding tour works is I basically take you out, I put you on a bus, and I show you how to review and analyze an investment opportunity. I believe that education trumps getting yourself involved in bad deals. So I want to teach you what to look for, the types of questions to ask, and how to be a competent lender, which means at the end of this 4-day training, you could go out and do this yourself. I would prefer that you continue to work with us, but you know, I'm educating you to literally do what I do. And for those of you that go in and fill out that form here tonight, because I'm interested in your education, I'm going to include 2 tickets to attend this funding tour in Vegas for free. Why? Because I want, as I said, I want to shake your hand, I want to look you in the eye, I want to develop a relationship with you, and I want you to have a comfort level with me, with my company, with my team, and with our affiliates. So come and hang out with us, meet with us. And if you opt not to do a loan until then, fine. Guys, we are not in a position where we need money. Every day we've got phone calls coming in of people wanting to put funds through us because they talked to one of our other lending partners, they had a great experience. So the referral network of what we're doing here is phenomenal. And part of the reason for tonight's training is, as many of you know, we were over at Prime at the medical conference, and we met a lot of really competent, really successful doctors who wanted more information about the lending process. Also, last week, we did a webinar to Equity Trust Database, and they've got a lot of people. They currently have $10 billion under management, and they want to help their customers learn the strategies to earn a greater rate of return on their self-directed IRAs. So they asked if we would do an educational training. So tonight, that's what it's all about. Just showing you what we do, how it works, familiarizing you with the process, and saying if you like it, come and learn more. Alan went to the training. He said, I would recommend this to someone who is an avid real estate investor or even those whom have just started in business. We try to cover all avenues, from beginning investor to savvy investor. We're going to start at the ground floor if that's where you need, or if you're a little more affluent, a little more a knowledgeable investor, then we can take it to your level as well. Mary says, I will recommend everybody that is thinking seriously about going into business and has had failures, you need to see it for yourself because it's a once-in-a-lifetime opportunity. Take advantage. Tawana says, I would recommend this to someone who has money sitting in low-interest bearing venues as well as realtors, brokers, and investors. Lee has really captured the very heart of private lending and created a company that I'm proud of being a part of. I'm strongly requesting all of my contacts and affiliates to come to an event. That was Tawana. Eugene said, I would recommend this to someone who is entrepreneurial in spirit and truly wants to be free and is looking for a great opportunity. And I'm sharing with you, these are your peer group guys. Mark says, I would recommend this to someone who wants to be a lender of private money and who needs to learn the mindset of a millionaire. And I know we have millionaires here tonight. Mindset may not be your challenge. Your challenge is just you don't have enough time. David said, I would recommend the seminar to someone who is interested in doing real estate deals, liens, or notes. It's a great way to learn about getting funds. Bill said, I would recommend this to someone who firstly wants to rebound financially, if that's where you're at, in this economy, and secondly, those seeking a new and brighter career path. And finally, Pamela says, I would recommend this to someone who is seriously seeking a lucrative income-generating business and has a desire and a vision for real estate and is sick and tired of their W-2 employee status, barely able to make ends meet. Okay? Now, questions, go ahead into the questions portal. I'm going to spend a few minutes here on questions tonight. After you put in and get your question answered, go to privatemoneybank.com/lender survey. Everybody who fills that out tonight, I'm going to give you information about the next funding tour, which is coming up in October. I know that's a long ways away. If you'd like access to it sooner, we do have a home study version of that I can give you access to online so you can get a little bit more knowledge and education right now. But if you are interested in learning more, just go to privatemoneybank.com/lender survey, and one of my consultants will give you a call tomorrow or the next day. If you are a professional that's running an office, if there is somebody specifically at your office that you would like us to contact and set up an appointment with you, I get that, because I personally don't take unscripted phone calls and I don't do appointments that were not scheduled. So if you're running a very regimented calendar, I appreciate that, and we will be sensitive to it. So just let us know who within your office that you would like us to communicate with, and we'll schedule an appointment with that person so that we can then talk with you. So privatemoneybank.com/lender survey. All right. Guys, I'm going to do about 15 minutes of Q&A. So I may not be able to get to all of your questions, but if I don't, or I just, for whatever reason, don't make it, when you do have one of our consultants call you, you can ask the questions there as well. So here's what I'm going to do. I'm going to go with the latest question asked going backward. Okay, latest question asked going backward. Okay, Norma, where do you usually do the funding tour? Norma, we always do them in Las Vegas because it's really easy for people to get in and out of. Michelle, will this be recorded and sent to us to review or forward to share with others? Yes, Michelle, it will, and Michelle is an affiliate. So Michelle wants to send this to other people in her contact list that might have an interest in lending. So yes, Michelle, we will make that available. All right, Steve, I received the property emails, only a few over a week or two. I would like to get these email packages to send out to my buyers looking for these deals. Some of these big money guys just wouldn't take the time to visit the PMBI site, but they love looking at the deals from my deal website. I would like to be added to the email list. Yes, I'm a PMBI member. Great, Steve. Steve, go ahead and go to privatemoneybank.com/lender survey. All right, those that go there, we'll make sure to get you on that emailing list. Pamela, please give the formula to figure the annual return on a loan, interest plus points. Okay, Pamela, the formula works like this. Interest is always annualized, okay? So when somebody quotes you an interest rate, what they're saying is this is the cost of money for the next 12 months. So again, Pamela, when you ask me, Lee, what are these funds going to cost me? I'm going to say, well, Pamela, they're 3 and 12. The next question you should ask, Pamela, as a lender or a borrower is 3 and 12 for how long? And I say, well, 12 months. Well, all you need to do if it's a 12-month loan is take the points and the interest and add them together. 3 and 12 is 15. So over a 12-month period of time, your return on investment would be 15% on your cash. Okay? Now, if you ask me that question, Pamela, it's 3 and 12, but it's 6 months. Well, understand that 12% is for 12 months, okay? It's the annualized interest. However, the points, we can earn that 3 points twice in a year because the loan is only 6 months in length. So basically, we have to take the 3 points for the first 6 months, the 3 points for the second 6 months, which is 6, and then add that to the annualized interest rate, which is 12. So if you were doing loans where you were only doing 6-month loans and you were charging 3 and 12, you would be making a 18% return on your money. Again, 6 points over the 12-month year and 12% over the 12-month year. So 6 and 12 is 18. If I didn't answer that to you, or if that's not clear enough, Pamela, let me know and I'll see if I can't make it even clearer. All right? RK says, do you think even 5,000 could be lended? Yeah, RK, we get crazy requests for funding. Like I said, we're getting over 10 to 20 loan requests a day. Now, for those of you going, well, Lee, if you're getting 10 to 20 loan requests a day, how come I'm only seeing 1 or 2 emails a day? Simple, guys. 10 or 20 emails or 10 or 20 deal submissions does not mean 10 or 20 deals that we feel are good investments for you as a lender. So we're going to hold off on pushing those out until we've done enough due diligence internally to feel that it's a good investment of your time to look at it. Again, if we're emailing it out, it's because we have spent hours internally doing all of our due diligence to make sure that it's worth your time as a lender, okay? Darlene, for insurance, certain areas have very expensive insurance requirements. For example, Miami Beach requires hurricane and flood insurance. Do you tailor the insurance policy requirement of the borrower by geography? Darlene, we require that the borrower go get the policy for insurance. So it's really up to the borrower to shop the best pricing for them. All we ask is that they get an insurance policy large enough to cover the lender's involvement, okay? So if you're buying a $200,000 house in Miami Beach, but you're only borrowing $50,000, you don't need to go get a policy for $200,000. If you're putting in your own cash, you absolutely should. But all we require is a policy large enough to cover our lender's investment, okay? All right, Frenchie, what is the protocol for a $5 or $10 million lender? Frenchie, just go to privatemoneybank.com lender survey here. Fill that out. I'll have one of my people call you, Frenchie, and we then will get a sense of how much you're comfortable placing in each deal, and then we'll determine how quickly you want to deploy the capital. So, Frenchie, if you came to us and said, hey, I want to move $10 million tomorrow, Frenchie, I can tell you that that's not a realistic goal because we would have to identify lending opportunities that match the criteria that you are comfortable with. So, Frenchie, when you become a proposed or prospective lender with us, know that we are working together to accomplish your goal for deployment of your capital as well as return on invested capital. So, Frenchie, it's not a blanket answer I can give you. It actually is it's a very detailed, very scripted strategy that we use to make sure that you are accomplishing your investment and your return on investment goals, and we're doing it safely. See, what happened really what caused the Great Recession was too much capital. You see, because Wall Street had such an insatiable appetite for mortgage-backed securities, they were throwing all of this money at mortgage-backed securities. Well, when you're a lender that is now responsible, when you are responsible for deploying all of that cash, you get a little crazy in what you'll lend it to and who you'll lend it to. So billions of dollars are being flooded. Countrywide is just being flooded with billions of dollars, and they can't deploy it into enough safe loans, so they start changing the rules. They start changing the lending parameters. They start saying, hey, you know what, we've got $10 billion here that we need into the marketplace, so why don't we create a loan program for owner-occupants up to $1 million, no credit requirement, and all they have to have is a job making at least $30,000 a year. So you see, Frenchie, when there's too much capital and there's an urgency to deploy it, bad decisions get made. And we don't want to make bad decisions. We want to accomplish your goals for investing, Frenchie, and getting a safe return, but we want to do it to make sure that your money's coming back. You know, a lot of people have this belief, oh, Lee, lending's easy. You just put your money out there. Well, oftentimes it becomes less about a return on investment and more about a return of investment. So don't get so caught up on the return on investment because you may put your money into loans that are a little riskier than you might otherwise have a comfort level for. So, Frenchie, we'll work with you or whoever your potential lending partners are to create a plan and a strategy to deploy the capital safely in good loans that will pay back. Good question. Anthony, am I able to start with no money, and am I the middleman between the borrower and the buyer? Sorry, I came to the webinar a half hour late. Can I get coaching on a month-to-month basis? Anthony, go ahead and fill out the form. One of my team can certainly address those questions and help you get started. Anthony, I can tell you that I used to, 15 years ago, I was a grocery store bag boy making $3.90 an hour. So I believe that education is absolutely what's necessary to take you from where you are to where you want to be. So, Anthony, we'd love to work with you, help you in any way we can to educate you, get you the tools that you need so that you can get started with no money, okay? So just let us know how my team can help you, Anthony, and we'll get you started. Tammy, what is the opportunity cost to the lender? Well, you know, Tammy, I don't honestly know if there are opportunity costs here because it doesn't cost you anything to be a lender. It doesn't cost you anything to receive our emails, and you can look at it as many emails as you want. So we will present you with 1 or 2 funding opportunities per day, depending on where you're at and what you're looking for, and you can look at those for the next 3 years before you decide to engage and get started. Now, certainly if you wait too long, you're not going to be earning your rate of return as quickly as you probably like, but the opportunity cost is free, Tammy. You just need to go in and let us know that you are interested, and we'll contact you and walk you through the process. Okay? Jeannie, as a lender, will the money be invested only for 6 months? Jeannie, that's really up to you. Because, Jeannie, if you have, let's say, Jeannie, you've got 30 grand, and you don't want to put your 30 grand into a loan that's anything longer than 4 months. Well, as we're sending you these deal sheets, just go down to the term or the length of the loan, and if you see anything longer than 4 months, delete the email. So, Jeannie, you decide. You're in complete and total control. We're merely presenting you with the opportunity. You ultimately decide, how much money do I want to place? How long do I want to tie my money up? What kind of return do I need before I'm comfortable moving forward? Jeannie, it's all up to you. And for the rest of you as lenders, it's all up to you. Okay? Now, for those of you who, you know, and this is going back to Frenchie's point, you know, Lee, I don't have time. I've got $10 million. I just want you to deal with it. Well, Frenchie, I can tell you that we have aligned ourselves with a group. We have created a private placement fund. And if you are interested in that and you are an accredited investor and you'd like more information about that, simply fill out the form, Frenchie, and we'll have somebody from their firm contact you to explain the details and kind of walk you through the program, okay? So there are other options. The only downside of that, Frenchie, is your rate of return would be less because you obviously have to pay somebody else to manage the process of deploying that capital. So just be aware of that. Well, I got a message here from Bill, says he lost sound. Can the rest of you hear me? Is that on my end or is that on Bill's end? Tammy, you can hear me. Can the rest of you hear me or is it just Bill? Okay, yes, we can hear you. All right. Bill, it sounds like it might be on your end, so maybe you want to hang up and dial back in, Bill. All right, thanks, guys. I got it. All right. I am quickly running out of questions, so now is your opportunity to ask them. Darlene, can I grow my business with you by recruiting other affiliates associated with me? In other words, their referrals go to my website and I can track which borrowers or lenders came from them. Also, can it be done in a way where I can control their percentage share of what you pay me, i.e. private money lender? Okay. Yeah, Darlene, we do have an affiliate program. As I mentioned, we have 800 affiliates spread out throughout the country who are driving these deals to us, and when the loan closes, our affiliates get paid. Darlene, if you are interested in becoming an affiliate, tonight is not about the affiliate opportunity, but if you are interested, just go to privatemoneybank.com/lender survey, fill that out. And when somebody from my office calls you, you can ask them, or you can let them know that you are interested in the affiliate opportunity. Okay. Also, if you want to contact the office tomorrow, Darlene, they can help you with that as well. Tony, how do you make money when you use a lender's money? Great question, Tony. Here's how. Tony, if we're writing a note at 14 or 15% interest, we're going to push it out to our lender partners and offer 10 or 11% interest. So, Tony, if it's your money, okay, we're going to give you an 11% return, and you're getting 11%. But we then take on the role of what's called a sub-servicer, meaning that we are making money on what's called the yield spread. So if we write the note at 14% interest to the borrower, Tony, we're paying you 11, we're earning 3, okay, because the borrower's paying 14%. 11% of those funds go to you, 3% of those funds come to privatemoneybank.com. So we make money as a sub-servicer, and we also make money on the points, because if we charge 4 points, Tony, we might pay you, the lender, 1 or 2, and then we keep 2 or 3 of those points, and then we share those points with our affiliates. So the affiliate who brings us the borrower makes money, the affiliate who brings us the lender makes money, the lender makes money, the borrower gets the funds that they need, and privatemoneybank.com makes money. So we pay out 50% of every dollar that we earn as a company to our affiliates. And any funds that go to the lenders come off the top. The net points then are shared between our affiliates and our lending and our borrowing partners. And that's why I believe, Tony, that it is such a successful program, and it is one of the fastest growing private money companies in the country. I heard the other day, statistically, we are the largest provider of private money lending nationwide. I don't have any stats to say that that's true or false, but if you go to Craigslist, you will see that we have a very prominent presence online. If you Google Private Money Bank, you'll get 10,000 pages of content about Private Money Bank, and that's not anything we've done. That's really the credit goes to our affiliates who've done an incredible job in their social media marketing and other things. So it works, Tony, because everyone makes money, and that's what I love about this business. All right. Nancy, are you a hard money lender? What is the difference between a hard money lender and a private lender? What is an affiliate? Nancy, privatemoneybank.com is a company that is a facilitator of people who have private capital to investors who need private capital. We are essentially the conduit. We have the borrowers come through us, we screen them, we determine that they are a good use of your time as a lender, and we present to you the opportunity to fund their deal, which in essence is private money. Now, hard money, from a definition standpoint, has always been defined as short-term, expensive money. And, you know, expensive is a relative term. If you can go borrow money from the bank at 8%, then you should. But most borrowers in today's market cannot. And the only place that they can get access to capital is either through private money lenders who are doing their own marketing and running their own companies, or they're utilizing us. So private money and hard money, Nancy, really can be interchanged. They're really one and the same. However, we are working on a program now. We aren't ready to launch it yet, but we're working with some very, very large funds, and our hope is to be able to provide not hard money terms, rather refinance monies to investors that want to buy property, fix it up, and then rent it out. So we right now are putting programs together to provide 70% of the appraised value of that loan on a 30-year note with like a 5-year balloon. I will make that announcement once those funds have been solidified and have been secured, but that is another area that we are quickly getting into, Nancy. So good question. Diana, what's the lender's interest rate range? Diana, that really depends on you, and I'll give you an example. We had pushed out a loan, I think it was last week, we pushed out this loan. We were offering the lender like 10% interest, and we got no calls because, you know, it was a property that needed a lot of work. Lenders were looking at it going, gee, that doesn't look very good. So didn't get any response of 10%. So we pushed it back out offering 12% interest, and we had 3 lenders call and we funded it. So the great part here, Diana, is you decide. If we offer 10 and you don't want 10 and you're willing to take 12 and you're the only one interested at 12, then we'll fund it at 12. But if we have multiple lenders interested and one's willing to fund it at 10 and you won't fund at 12, well, then they'll get the deal and you won't. So there is a balance, Diana. You've got to be very cautious in your balance, because sometimes being too greedy or, establishing I won't do anything that I don't earn at least 12%, that's fine. You can certainly take that position, but there's a good chance that your money won't get deployed because other lenders are willing to earn less. So there is balance there, Diana. So keep that in mind. Dave, do you partner lenders on the same deal? Dave, we try not to, and to date we have not. If multiple lenders want to syndicate in on one deal, we will contact each one of them, ask if they're interested, and then connect them together. We don't want any of the liability that comes into play by connecting or creating the entities for that structure. But Dave, the very nature of your question tells me that you are sophisticated and you know what you're doing. So we would just bring you together. So if we have a $200,000 deal and we've got 4 lenders each with 50, we would put you all in contact and you guys can work together to make that happen. Okay. Tony, any issues with promoting the 8 to 12 return on investment? Tony, there is a fine line there, because offering a rate of return, soliciting funds, you can in some cases be in violation of SEC rules and regs for raising capital. Now, I can tell you what our attorneys told us and shared with us from their counsel. We can offer 8 to 12% return because we don't commingle funds, nor do they place their funds with us. So we're not raising capital in the traditional SEC or security standpoint. We are simply identifying interested parties and then presenting them with loans. So because their money is being placed against real property, it's not a security. So, Tony, we have been advised by our counsel that we are okay in saying that. So, great question. All right, guys. Well, I am out of time here tonight. I certainly appreciate you being here. I hope that this call has been beneficial and helpful for you. If there are any questions that I did not answer that you would like to speak with somebody in my office, just go to privatemoneybank.com/lender survey, and somebody from my office will contact you and see what we can do to help you out. Okay? So God bless you guys. Thanks for being here tonight. Have a good weekend. Remember, it's Mother's Day, so be good to your mom, and I'll talk to you all later. Have a good week, everybody. Goodbye.